Welcome to MGAA Conversations, a new podcast channel where we'll be discussing with an exciting number of guests all things related and topical within the ever-growing MGA community. Welcome to the latest episode of MGAA Conversations. Today, I'm absolutely delighted to welcome Mike Crane, SME and Specialty Director at AXA UK. Mike, a very good afternoon.
Good afternoon, Mike. Good to see you.
Yeah, great to have you on the MGAA conversation. So let's get straight to it. So, Mike, I think it's just over 6 months maybe now since you joined AXA. Probably feels a little bit longer than that, but I'm sure you can share that with us. Could you remind our listeners in terms of what your responsibilities are and your thoughts on the business over the last 6-7 months?
Yeah, sure, will do. Yeah, so I joined AXA beginning of this year and really enjoyed it, really enjoyed being back in the market. I'd had some time out last year. Great to be back. AXA, I was really interested from the outside in terms of looked like a really interesting business to join. And I'm very lucky that the portfolio of stuff I've got to look after. So I look after our delegated authority business, which is a really big, important part of our business. But I also look after our financial lines and specialty lines, as well as our SME business. So quite a broad remit. But one of the things that attracted me joining AXA is I think the ambition we've got in all those spaces, but particularly in delegated authority, something I could get excited about and hopefully we can make a difference in.
Yeah, and do you feel, Mike, because obviously with your background, and our listeners will know your background, you've had sort of very senior roles in other sort of company organisations. Do you see a sort of difference in terms of sort of innovative approach? You know, not criticising previous areas. Does each insurer have a different feel and sense to it, or as some people say, it's quite vanilla in terms of when you're working for large insurers? What's your sense on that?
Look, I think if you're working for a large insurer, there's a certain amount of stuff we do which you go, well, that's the same, isn't it? You know, there's definitely a certain amount of familiarity you get. The thing that stood out for me though with AXA, and I think, and hopefully comes through in the market, but the culture in the business, the passion in the business, the people in the business are the thing that I think has excited me the most having joined. John Walker, the CEO of the commercial business, really, really experienced in the market, and that makes a big difference, but also very thoughtful, very balanced in terms of the way you approach things. And then when I look at the teams I've got, you know, looking at Joel and the DA team, really class team, and so well engaged in everything they were doing. That's the bit I think that that's really hard to replicate. When you've got teams that have got that passion and that great culture in them, that's the bit that's hard to replicate. And I think that's the bit that makes it really, really different from in different organisations.
And just staying on this theme finally, sort of when you look back on those sort of 7 months, Mike, have you been able to mix your time with sort of meeting clients and understanding the internal stuff? You know, where would you see in terms of what you've looked to sort of hopefully achieve in the first 6 months, 7 months?
Yeah, I mean, I set myself, the first couple of months to really try and understand as much as I could about the business, about the people. Because you never get that chance again, actually, if you miss it. So I think I've gone through the period now where I can ask the stupid questions and get away with it. But also, you know, the external bit and getting to meet a number of our partners, understanding what works and why it works. That's been really important to me. Understanding, within the AXA relationships we've got, what is it making it successful, and then obviously that opens up to kind of what we may want to do next. But it's been really good for me, kind of immersing myself internally and externally, and getting a real feel for how everything works.
Yeah, I think that's a great point, actually, that you make, that the opportunity for sort of 10 weeks to spend time understanding what's going on and how it works, when actually you very rarely get that opportunity. You sort of tend to have to hit the ground running, and all of a sudden you don't remember anybody's names because you're already up and at them.
You've gone beyond that point, and I still find I can do it. There's still plenty of things I'm still learning every day, still learning more about. I think you can understand the organisation, but you also have to understand sometimes the history about what's the journey we've been through to get here. And that's really important, the teams have been brilliant in terms of helping me on board and externally as well. I think we're very lucky. I would say we work in a sector where people give their time and their opinions freely, and generally are really supportive, and that just makes it a joy.
Excellent, excellent. Okay, so talking about AXA, sort of, I know your sort of half-year results were sort of announced, I think last week actually, and obviously 7% increase in revenues and underlying earnings. Now, the market, and you and I have spoken around the rating adequacy environment in terms of the direction of travel on that. When you look at certainly your DA sort of piece, Mike, under your sort of particular areas you're accountable for, what do you see are the key disciplines which are going to need to be adhered to in that environment, and sort of actually increase competition? Because naturally there's a lot of talk. I'd be interested in your view that top line targets are quite stretching for both your peers and probably no doubt yourself. So what are you hoping for in terms of both from AXA and from the market in terms of navigating what will be sort of challenging times?
Yeah, I mean, certainly, I'd have enjoyed it more with slightly different market conditions. So
You
that's
shouldn't have spent so long in the garden, Mike.
well,
That's what
yeah.
it's
There's a pain bit going on there, I suspect.
yeah.
Look, I think, and one thing, from a AXA perspective, and say up front, is be really clear. We're playing for the long term, so we have a very long term view on the business, and I think that's really important at times like this as well. And everyone will take their own view on who's out there playing for the long term and who's in it in the
Yeah.
short term. The bits that hold true, and they hold true, I think, throughout the different sort of market cycles, is, I guess for us, firstly, we need to write the right business. So that risk selection is really important, in terms of what are we writing, do we understand it? In the DA space particularly, I think that also means about having the right partners. So who do we want to work with who also shares that long-term view? Because actually, if they do, we want to back people who have got a long-term plan for their business, and they're heavily invested in it. That will help guide all of us through the market conditions we're in. I guess the other bit, and I think, when you see market conditions changing, is, we come into this in a pretty strong place. That's quite important. So it does give a little bit of room to manoeuvre, room to operate. That's been really important. Um, I think you mentioned, top lines under pressure, and under pressure for a number of people. Um, I guess the other thing for us is really important is we do want to make sure we protect margins. So also still being brave enough to know when to walk away, when you
Okay.
go, you know what, that's not right. Because if we're going to compromise, you compromise on price and you start compromising on quality, you get in a mess really quickly. And none of us will thank ourselves if we're here in 12 months' time having very painful conversations about where did capacity go and how difficult this is for customers at that point. So I think, having that eye on the future is we know where we don't want it to go. But for me, the biggest things is, are we really understanding that we're doing the right business, and are we really clear we're doing it with the right people? If we've got that and they share the same long-term ambitions as us, I think we'll trade very successfully through the conditions we're currently working in.
Yeah, and I assume, the approach you look to take that with your, and I think the key word in your sort of articulation is that long-term view, is that you can recognise with your sort of DA partners that, over a 3-5 year period, whatever the length of that sort of contract, there's going to be times where the margins will be slightly squeezed and other times when the margins are a lot, and it's actually taking that long-term view over the relationship, not necessarily in one sort of moment in time, because market conditions have been quite favourable for the last 3 years, and it could be that the next 12-18 months may not be as favourable, but it's looking about the whole length of that contract as such, to taking that long-term view. Would you agree there?
Yes, I would. And I think, but you've got to make sure you're doing it properly. So, I think, yeah, most of the partnerships we've got, they are long term by nature. So we would very much look at it on that period. I mean, I guess the other thing we will look at, and I know I think particularly in kind of the market we're in as well, is we've also got to look at ourselves to figure out, do we become a really efficient, good partner for people? So
Yeah.
actually, there's that's a controllable line as well, right? Around making sure we are efficient and where we're cost conscious. That's also really important at times like this. It's really important with our partners as well. We know. So that's another bit we'll just always keep looking at, because everything we can do in that perspective help give us a bit more money to cover the claims that we're dealing
Yeah.
with, and that's what we're here for. But um, I think different markets are in different places. One of the benefits I guess we've got of we write a broad portfolio business, so we also look at how that balances out. But I can tell you, we are constantly rechecking where we think we are, where we think the market is, where we're comfortable with margin, and where that gets squeezed, then just really thinking about what the next actions are and whether how comfortable we are. But we all spend probably a lot of our time on decisions that aren't quite as comfortable as we'd like at the moment, and I think that's when then the extra ingredients come in around the partners we're working with that really help.
Yeah, I think you've made a very, very great point, and in what you've just shared, both which will resonate with our listeners and both your partners and potentially new partners who sort of listen to this podcast, is the fact that you have a clear focus on what you're doing as AXA internally, as well as actually supporting your partners. And sometimes that gets lost or is not seen, that, how you can make yourselves more efficient internally and not necessarily always trying to transfer that responsibility onto the partner. And I think that's a real sign of partnership. So I'm sure that will resonate really well with, the people who listen to this podcast. So it's a very, very valid point.
And it's certainly something. If you go back a few years, we AXA made the decision to bring all of our delegated authority business together. We run it as a discrete area of the business. That gives us the right focus on it, and I think it gives us the ability to be a lot slicker in how we're doing
Yeah.
that. But there's plenty more we can do. So that's an area we're constantly looking at to figure out how much better we can get.
Yeah, because you wouldn't want to miss out on those very enjoyable sort of arm wrestling around expense allocation, would you, Mike? Because
Never.
always good fun. Always good fun. Then.
And they're always higher than everyone thinks they are. But it's an expensive business we run.
Absolutely. So, Mike, turning to technology, and obviously there's always a lot of chat around technology, and we majored on it quite a bit on the MGAA conference, which I know AXA was well represented at. So, can you just share where AXA are in terms of, and I use the words real AI implementation, because I don't know it's real as opposed to perceived, and I think from that bit, and in what areas, you think if you go out 24 months, the operational and technology landscape will look like, i.e. will it rapidly move and that things will be completely different, or will it be a sort of step-by-step basis? What's your own personal views on that?
Yeah, I mean, it's really interesting you say kind of real AI, real AI. And I think, there is a watch here, is that, we'll talk a lot about it, and there is undoubtedly some key areas where it can make a real difference. But it does rely on having good quality data underneath it. If we want to rely on AI and being able to be a lot more involved in our processes, it needs to be underpinned by really good quality data. Without that, you're just going to get a mess. We've already deployed in some key areas. So within the DA area, it's already helping us with things like bordereau ingestion and also how we manage referrals, things like that. That's been really insightful. So in terms of the border ingestion, it's just really helped make that a much more automated process, and it enables us to still be flexible in terms of the partners we're working with. So that's been really good. In terms of managing referrals and giving us insight into where they're getting, that's also an area of, when we're looking at cost management, actually, if we can really understand the themes coming out of it, we can do more to then just kind of reduce that cost and friction between us and partners. So that's work that's ongoing. Within our underwriting teams, we're looking at whether we can use it more in terms of the searchable manuals and making sure we're surfacing kind of the right guidance. So we think definitely in those areas it works well. On the voice side, and I think this will probably be claims led, but there's definitely opportunities in terms of call summarization, making sure we're driving out the actions, what's been agreed, and making sure we've got those really good kind of records. That's taking a lot of friction out of what would have been quite a painful historic journey of a lot of manual typing a note. So things like that, I think we can, we're already moving on, and I think we'll continue to do so. If I looked out in the future, I think I guess in the claims areas, we are thinking about that in terms of how it improves the customer journey. I think the thing we are going to need to watch for, though, is customer expectations are going to change.
Yeah.
So our clients' use of AI as well will be changing what they and how they want to interact. So I would expect in the next 24 months more work to be done in that customer journey, be it in the claims side, but also maybe in other areas as well. There's more operational support we can get. I think the other thing we'll probably figure out in the next 24 months will be the areas that it doesn't help.
Right.
And actually go, actually, no, that's where our human value is, and make sure we protect it and don't mess around with it. I think we're still a little bit in the experimental phase where we're going, well, let's have a look at this, let's see what it could do, have a look at this, see what it could do. I think that's the other thing that will sift out pretty quickly over the next period, is the areas we should double down on and really make the progress, and areas you should leave alone because it's not going to help.
Would you agree that, I'm not saying that, well, I'll ask the question, there needs to be more caution around the adoption in claims, given both the regulatory oversight and the fact that, customers, still generally like to speak to somebody around, when they've had a claim, and from that perspective, do you feel, I can see the benefits for operationally, as you've articulated, around, driving out some duplication in claims in particular. But I think it's a dangerous place if we all of a sudden try and get that AI automated, and all of a sudden the ability to speak to a sort of a friendly voice when a customer sort of potentially is in slight distress or behind the eight ball, is quite important. Maybe more so than maybe other areas. What's your sense?
I think you're absolutely right. In the claims space, real caution, real empathy with customer.
Yeah.
If we've got a client who's just had a claim, they are in a potentially in a distressed position.
Yeah.
The last thing anyone needs in that environment is to be feeling like you're in some kind of digital hell loop where you can't get progress.
It's a great description.
And you can't speak to a real person. So I think that bit around protecting the points at which we do want that human interaction again is going to be really important. There's definitely bits then in the process behind it, and certainly where we're looking is, I think, in some of the process bits behind it, we can just help it to speed it up, which would actually help the customer, but not lose sight of. But actually, people need advice, support, and kind of clarity on what's going to happen next. And that's what we're here for. So I think there is a huge part of our claims business which is in that personal contact space, and I think that's really important and be protected. So I think, yes, but I think in all areas, right, there needs to be caution about making sure we understand the consequences of what we're doing it. I think we do a pretty good job of protecting the human contact in those spaces. You look at some other industries now where human contact's almost been removed completely. And maybe it's just me, but how frustrating we all get when we're trying to get outputs. And actually, feel like we're getting some fairly dumb kind of automated outputs when I think it creates real frustration. So used in the right way, it can help us. Used in the wrong way, will damage the customer, and that we're not going to do that.
Yeah, it's interesting because I think that it's the caution sort of which I referenced because, and it's no secret. You look at anyone's P&L, especially large insurers, the claims piece is heavy lifting in terms of expense, and for the right reasons, even outside of indemnity spend when you have, lots of FTE and whatever. And of course, you could look at it brutally as an area where you can say, well, technology can actually sort of save X amount of money, which is a big amount. But as you rightly point out, it's the consequences of doing that, not just an accounting type action. Because you could do it, make a quick win, but actually it could damage the business for long term. And I think it's that piece which both the regulator is keeping a close eye on, and something you've just discussed as well.
Yeah, where I think it can help us is if you look at one of the friction points in claims comes is the chain of people between the kind of claims notification and getting it fixed. Can we bring those parties together in a more joined up way? Can we make it more transparent to our clients of what that looks like and where they are in it, so that everyone knows everything about what's going on at the same time? I think if we focus in those areas, actually everyone will get a tick up and go, "That's great, that's really helpful." And if we could all spend less time then wondering about where something is, who's got it, and just getting on and dealing with it, that's going to be massive.
No, that's a great point. Actually, absolute. I think that's the number one priority, Mike. I think well spotted. The absolute priority from that bit. So, Mike, you touched on that part of your sort of area of responsibility that AXA has a large and growing MGA sort of DA book. Just looking sort of again slightly horizon scanning. Are there areas you're sort of currently looking at which maybe you feel you're underweight in, or areas actually which you're not in, which you're actually keen to explore?
Yeah, I mean, I think so. When we look at our DA business, and so we've got a breadth in terms of what we write in it. That's quite deliberate. So we want to have a breadth of business we write. We've got some very strong existing partners, and I think that's really helpful in terms of a number of the opportunities we will look at where we broaden out will come from those existing partners just having broader conversations saying, well, we do this with you. What about if we do that? And one thing we are if you look at what AXA will write, the DA space is where we would tend to want to stretch our appetite first. Because if we can partner with somebody who's got the expertise and understanding in a market, that's a really good way for us bringing out that breadth. The breadth's important because one of the things we want to, why do we want to have a broad portfolio? Well, we want our DA business to effectively help diversify our core business as well.
Sure.
So it makes no sense if all we try and do in the DA space is everything that we already do in the core AXA space, because all we do then is we trip over ourselves, and actually that doesn't really help. So that diversification bit is really important. We've seen it recently, so we've grown in some of the areas, specialty areas, and some things like surety, latent defect. It's also where we tested something like cyber, because again, it just makes sense to do it. So we're very much open to still expanding the breadth. Since I've joined, I still think we've got significant opportunity in terms of more we can do. And actually, I think a number of the conversations we're having with our partners kind of supports that. So what's key? I mean, being really simple, if we're going to expand, we want to understand that we can find profitable niches that we can that work well. That's going to be predicated on having expert teams in place who really understand it. Ideally, avoiding the distribution clash, and I think playing back to our earlier comment as well, with the long-term potential. So we're not. What you won't see us doing is dipping in and out 6 months in and then flipping into something else. So if we go into something, it's with a long-term belief and a long-term plan. So we want working with long-term partners, whether they are existing ones or new, but that have a really good understanding and story about where they want to take their business and what that looks like. If we can then sit in behind that and provide the capacity and the confidence to deliver that, then that's a great outcome.
Yeah, if I could sort of just circle back on that. So do you see potentially with the strength of the MGA sector, which we've talked about, and obviously we've got 250 members, UK and Ireland, and we talked previously separately around Europe and beyond, and having experience in a big insurer, and you've obviously got close experience about basically how challenging it is for a big insurer to develop and distribute and create a new product in terms of with systems or whatever. Do you feel that maybe the market and insurers will say, well, look, this is our core offering, and actually, instead of trying to build it ourselves, given those challenges, and it's always challenges because of the size of organisation, why do we not actually then just completely look to deploy our capital and actually go into those areas, because the professionalism, the underwriting expertise of the MJ sector as such gives us a speed to market, underwriting expertise, and actually that's a far better option now than try and build it ourselves. Do you think that is a shift, not necessarily just in AXA, but maybe across the market, that may be part of the fueling of MGA because of the challenges in building it yourself?
I think it will be to an extent.
Okay.
I think there's no doubt about it. I think if you look in any large insurer, you look at their kind of the change stack, and we all want to do more change than we've got the capacity for. So you have to make some choices then around what you're going to spend your own time on. I think the MGA space gives us the opportunity to kind of probably do a lot more in parallel
Yeah.
than if you were trying to do it all yourself. So for us, that's really quite well thought through. I think you've also got, and I mean, I think it's particularly probably in current market conditions. I think you've also got, and I think it's the danger bit actually, is if people see MGAs as the tactical top up because the top line's not working somewhere
Right.
else.
Yeah.
Yeah, I don't think that's sustainable in the long term because
No.
you're not building what you need behind it. But I think they are complementary, and I think there are again, it's the areas where you've got that expertise, and where does the expertise sit? Because again, if you're insurer side, and you want to go into something new, well, the first thing you're going to need to do is go and buy in that expertise to start you on that journey. And so I think actually that's a key decision point then. Is that what we would want to do? Or actually are we better partnering with experts that already exist, already have a business model that we can actually support and make work? And I think that's probably why the two in parallel, I think, can work really well together.
Yeah, it's interesting. Yeah, I wouldn't disagree with any of that. So I want to touch on the regulatory environment. Obviously, Matt Brewer's announced that he's leaving to KPMG, which I think, personally, and certainly for our members, I think that's a shame, because I think he was very collaborative, engaged. Obviously, got to understand the sector, was quite firm on the areas around principles which he wouldn't sort of compromise, but always had an ear. And I'm sure Lisa Sterling and the team will continue that. So, obviously with Matt gone, what would you like to see, perhaps Mike, in particular around the DA/MGA sector from the regulator over the next 12 months, or
Yeah.
anything specific on that?
Yeah, I mean, I think certainly, and again, you referenced Matt there. We had someone who had a really good understanding of the sector, and that takes time. And credit to you, Mike, you've done a lot of work in that space to help make sure that they have a good understanding of the sector and how it works. So the first thing is, and as that team reshapes, is making sure that they have a really good understanding of how the market works and perhaps
Yeah.
some of the nuances in it, because we know if you just take a broad brush approach on some of these things, then actually you get a lot of pain in the middle. My optimism would be, and I think if I look at some of what we've seen from them recently, I think there is a clear focus from the regulator about thinking that the regulation, it needs to be proportionate, it needs to be appropriate, and I think they're thinking through really well. Well, how will these things work in practice?
Yeah.
So I think that's helpful. I I guess for me, I think in this space, one of the things that um, we need to work on with them is still how we avoid duplication of work.
Yeah. Yeah.
So I think if you look at things from a customer outcomes point of view, none of us are really going to argue about what good customer outcomes look like and why that's important. The bit I think we'll need to keep working on is, but how do we properly underpin that, and how do we do that in a proportionate way, and how do we avoid too much duplication, whereby we will be doing something and MGA will be doing something as well, and you go, actually, is that really adding value? So I think that's going to be a really important part. But I think the bit that starts with that is, but there needs to be a good understanding of sector to start with.
Yeah.
It's a key area. I think it operates well, and but we're probably still a bit more clunky in the regulatory oversight space than I think we could be.
Yeah, I think that's excellent sentiments, and hopefully whoever is Matt's successor will work as hard as we can to make sure they understand it as we've done before. So I think all of our listeners will sort of underline exactly what you've just said. Okay, Max, so we're just coming to the end really, actually. So again, my normal closing question. So if, and hopefully we will be having this conversation in 12 months' time, what would you be hoping that you'll be sharing with me and our listeners regarding to your progress?
Well, 12 months' time, Mike, so we're going to be in very different market conditions that we'll all be celebrating, I'm sure. But I think what would I like? I think what I would hope to be sharing is that we continue to be a really strong delegated authority partner, that we're growing with the right teams, that people value working with us because of that long term and the understanding, the expertise we bring. So hopefully, and that's where your members, that's what I'd love them to be saying. I guess the other thing is, one of the things we challenge our teams on, and one of our mantras is to dare to be different. So I'd also, 12 months on, maybe I'd like there to be a few surprises where you're looking and going, wouldn't have expected you to be doing that. I think if we could deliver that as well, that would be great.
Great. And on that note, Mike, let me again thank you on behalf of myself, the MGAA, and all of our listeners for taking the time out and sharing your thoughts, which were fantastic, insightful, and very interesting. You have a great day. All the best.
Thank you very much, Mike. Great to speak to you.
Many thanks for listening. We welcome all feedback, so please get in touch with your suggestions on topics and future guests. Please don't forget to subscribe on your chosen platform so that you don't miss out.